Hi everyone, this is a video for the private channel. Today is March 19th, it's Thursday I think, and we'll start with Bitcoin, and then we'll also take a look at Toncoin. So, what I want to draw your attention to, let's start with the 4-hour candles, bottom left corner. The cursor is highlighted in black, kind of gray. Look, there was a strong overbought condition here. From this overbought condition, we got a potentially reversal candle. That is, it set a new high and closed with a solid red body. And we went down to unload this overbought condition. Now we've entered an oversold state. There are still no formal buy signals at the moment. That is, we don't have any kind of reversal candle. We don't have a bullish engulfing pattern here. Moreover, we still have some downside targets here as well. There in the range, let's take a look, from 69,500 to 68,280, let's say. Well, somewhere around there. But here there's already a potentially interesting point for entering a long position. I emphasize it's not a long yet. Now let's look further. 12-hour candles, here right next to it. Look, it's the same thing. Strong overbought condition, the PP indicator has turned downward. First of all, we've moved away from the 100 period moving average, which we broke through for the first time in a long while. Basically, we broke through it on the first attempt, which in a sense speaks to the strength of the trend. But now we've come back to retest it, and we might also test the 50 period moving average. We could even go somewhere down here to the base of the starting point. Yes, well, the last starting point, which is $66,000, we could go even lower. We could test $60,000. But right now, what are we talking about? We're talking about the fact that right here, there were signs of a decline, overbought conditions. Before, we had a large candle on the indicator, potentially a reversal candle, and then a bit later, targets formed, one of which we've already reached, and the second one we might reach as well. Here, the movement is directed downward. So if we look at this arrow right here, we can see that it's pointing, like this downward. For now, the movement here is not finished yet. At the very least, it might be finished, but we'll find out about that when it actually ends. But right now, it is still ongoing. Daily candles. The situation here is interesting. Let me explain why. It allows for both growth and decline. First of all, the PP indicator continues to point downward. Yes, the daily candles have cooled off. They are already in a neutral position. The 12-hour candles are in a state of very slight oversold, and in theory, they could even reverse from the current levels. And what is important here, this is what I just recorded in the voice messages. Look at what has been happening with us. Let's grab the drawing tool. Here we had a sideways trend. The upper boundary of this sideways range is right here at the base of the green candle from February 6th. And the lower boundary, right here, exactly the same way. It's just that here is the close and here is the open. The base is actually the open, the green one. There you go. So what did we do? We broke through this boundary. Where did we stop? We stopped at the open, the opening point of the big red candle. And that's the one we should have engulfed in order to reverse the trend. Right here, but we didn't engulf it and return to the sideways range. Again, these are marked by the levels. Here, 70,160, 70,580, and 62,909 respectively. Now look, we are testing the 70,580 level. We are testing the 50-day moving average, which we broke through, moved away from for a while, and now we've come back to it. And even if today we suddenly close below 70,580, that still won't be a definite reason to say we're going further down. Although, of course, it would already be a pretty serious indication of a decline. But if we close above, and especially if it's with a green candle, then that would, of course, be a signal for a reversal. But we can only really talk about a reversal when, first of all, we see an exit from this sideways range and a daily close above 75.80. And ideally, a bullish engulfing pattern on the daily scale. Why? Because this green candle was just recently, well, not just now, but yesterday, it was engulfed during the decline. Then right here and now, at this moment, we are engulfing the green candle that came before it. And accordingly, this is a technical reversal downward without any doubt at all, which implies further downward movement, technically at least to this level of 69,900, but we've already been here, and if the move continues, then it's down to 68,400. Well, at that point, we're getting too deep into the flat zone, and that could already mean we're heading here to 62,900, or 63,000, and potentially even updating the minimum below 60,000. But right now, strictly speaking, due to the oversold condition on the hourly chart, I've highlighted it here, the oversold condition on the 4-hour candles, and already some oversold signals on the 12-hour chart, and not overbought. There's no oversold condition here, but there's also no overbought condition. On the daily candles, nothing is preventing us from growing. And so far, there is still no clear bias toward growth on the weekly candles. But here too, it's very important how we close the current week. With what kind of body? It's acceptable to close it with a red candle, but the main thing is that it shouldn't have a normal size body. That is, if it looks like a dumbbell, with a small body and large wicks on both sides. If there are shadows, then it will just be a candle of indecision. But if the body is like it is now, then this is potentially a reversal candle. That is, it will look much more bearish, even though there won't be any engulfing patterns. But for now, the situation is on the edge, and it's still within the bounds of a completely normal technical correction. Before the weekly candles continue to grow toward the area of the 100-week moving average, and potentially toward these mathematical targets. Yes, but that's if we talk about the lower boundary, that's 93,170, and for the upper boundary, let's say it's 100,200. Actually, it's 100, 1,500, 100, 1,600, and right here is also the 50-week moving average, which is at 98,300. But I'm allowing for a bit of a margin, so I'm telling you 99 to 102, although in reality it should be 93 to 102. Yes, so the lower target, because the weekly average is actually decreasing over time, and when we reach it, it might end up right at the threshold, well, at the lower boundary of the nearest growth target. Yes, somewhere around $93 to $93,500. But overall, pay attention, the monthly candles are also oversold. Of course, this is not a guarantee. That is, on the monthly candles, we could draw out a long sideways movement like this and remain oversold for a long time, continuing to decline and so on. But this is based on a combination of factors. Hourly oversold, 4-hour oversold, upward direction of the weekly candles, growth targets on the hourly and weekly candles, achievement of targets on the monthly candles. In other words, movement is possible. Somewhere around here on the monthly candles at least, yes, around $78,000 to $79,000 to the base of the candle. And even formally, this would not break the downward structures. We would simply trigger the short sellers' stop losses in order to then go and update the low below $60,000. So the optimistic forecast is growth to the area of $87,000 or $102,000. And the pessimistic forecast is growth to the area of the base of the February candle, to the area of $78,000 to $79,000. Moreover, if you remember, I've said a billion times that around $79,000 we have a serious magnet, and we are very likely to go there. But we are also very likely to go below $60,000, but probably a bit later. And why is the probability of going below 60 so high? Yes, because the stock market has dropped by about 4 to 5% from its all-time highs, if we're talking about the S&P 500 index. So there's this situation where Bitcoin locally has the potential to rise to the area of 77 to 79 and even 99 to 102,000. But globally, of course, it is very likely to end up below 60%, $1,000, and it's quite possible that it could fall below 50 or even 40,000. Because if the stock market really starts to go down and the shockwave from the events in the Middle East finally hits, if it reaches the global economy, then the stock market will fall, and it will fall very hard. All these are processes that have a certain lag in time, a certain delay. Again, until the front of the shockwave from the events surrounding Iran reaches the real economy and effectively transforms itself into tangible, productive activity for local companies and small businesses. Subscribe to the channel. All the best.